G'day, folks. Welcome to this week's weekly wrap. It is Friday, the 7th of August, and the time keeps flying by, guys, and we're already into August. I was using getting through 30 June as an excuse not that long ago, but that one's well and truly dusted, and here we are heading towards August. The good news is we're heading out of a winter slowly but surely. We're getting there. How's everyone's week been?
Yeah, all being good at my end, and yeah, seeing the sun coming up a little bit earlier is lifting spirits. That's for sure.
All good with me as well. Getting over the hump of winter. I think we're all looking for that sunshine on the horizon.
Well, it's starting to look nice for the weekend too, I believe. So hopefully it'll stay that way, so we can enjoy some sunshine. My last blood test on full disclosure, guys. My last blood test said low on vitamin D, so I need the sunlight. It's the only thing they can say. Maybe I need a holiday more than anything else. So let's get to some market numbers. It's been a pretty big week in markets. In truth, when I have a look at the numbers that have been coming through, and thankfully all greens this week, but some significant moves. So straight to what's been happening at home. The Australian market, the All Ords, is actually up 3.35 for the week. So we've had today it's sort of struggling to hang in there, sort of off 0.05, but it's been sort of green all through the screens this week, which has been positive. I think it's been the miners doing the hard slog, and because we don't have a IT area in truth, so it has been the miners that have sort of been propping up the Australia market. But to be up 3.3% for the week has been good. And when we look at what's been happening in the US, the S&P 500 is up 2.9, and the Nasdaq up 3.83. So the market can't seem to decide whether it wants to pivot in or out of AI, whether this is a passing fad, and where it's heading with all this. But been positive for markets in general, and the both US markets and Australian markets this week have hit record highs. So sort of defying all the stuff going on around the world, and still managing to hit some new fresh highs, which is good for investors, but also, I suppose, a little bit concerning. Do you think, guys, given that the world, genuinely, there's a lot going on that isn't too flash?
Yeah, exactly. You sort of look at what's going on. It's still in the Middle East. They're sort of talking about opening the Strait of Hormuz up, and then also Gaza. They're talking about breaking that up as well with the peace treaties and the such. So a lot of things going on in the world that sort of wouldn't reflect a share market at the moment.
Certainly
I
sounds
think,
that way.
Yeah, and closer to home, I think a lot of sentiment is just people are feeling a bit concerned. Petrol's back up and prices, and getting some new data out of the property markets that some of the other capital cities other than Sydney and Melbourne, which have been sliding a bit with property prices for a little while. Finally, we're seeing in the last quarter that Perth and Brisbane, etc., are joining that sort of trend, and it often has a wealth effect, that feeling for people that things are not so great, and drawing back on their own sort of spending and sentiment there.
It's interesting on the property front. There's been a lot of murmurings around the property market, clearance rates, and all the rest of it. And there's a couple of schools of thoughts out there, which is it's interesting to sort of try and get your head around. Some people are sort of saying, well, with the pullbacks that we've seen in Victoria and in Sydney, particularly here in Victoria, people are saying, is it becoming cheap enough to become buyers from other states, and actually starting to push the Vic market the other way, perhaps. And then in places like Brisbane and Adelaide and WA, where the markets have been going gangbusters, people are sort of saying, well, there's been quite a few listings that are actually on the market there, where people are saying, is it the top of the market here? Should we be sort of cashing in our chips? So yeah, the property market, depending on what state you live and what your view of the world is a very difficult one to sort of predict. But again, I think that like we always say, regardless of the asset class you're invested in, don't be a forced seller. Yeah, there's nothing nicer in a time like this, that if you are holding on to an asset like a property that may not be as highly valued as it was a year ago, the ability to say, that's okay, I don't need to sell. that's quite a powerful statement. So, but you need to make sure you're in that position at all times.
Yeah, correct. I was listening to a podcast with a property expert the other day, and they were saying that yes, property prices have come off at the moment, and they're saying for the next 2 years they'll be coming off or even flat, and then after that 2 year period they'll see increases. So, like you said, if you're not forced to sell, you could ride this out for the next 2 to 3 years.
And I think that with those sort of investments, they're the sort of timeframes you need to be prepared to, look at alternatives and sort of say, well, okay, that plan's not really working too well. What does plan B and C look like as far as liquidity and the like, so I can sort of get through this. But, unfortunately, a lot of people don't find themselves in those positions where they end up being both price takers and forced sellers, and that's when the pain really starts.
And look, this was the whole point, wasn't it? Housing affordability, right? These tax reforms, the discussion out there in the community. I mean, it does have a specific meaning, like prices have to get cheaper. So it's sort of really the outcome that everyone could expect between rate rises and this tax reform sort of concern that's out there at the moment with the government announcements for the May budget.
We just need to find a way to convince these first home buyers that it's a time to sort of step up to the plate, but that doesn't seem to be happening now. So look, these things take time and there's always a lag involved. So let's see how it plays out. But I think we're going to hear a hell of a lot more about that particular topic on the property market around the country.
And look, maybe there will be some relief on that front, a little bit less fear out there with the announcements this week of the government sort of reversing tack and doing a bit of a backflip after those some of those announcements, which were going to affect negative gearing. People with existing negative gearing were meant to be grandfathered, but the Liberal Party in opposition has jumped on using the term the widow's tax. And also the divorcee tax to say those grandfathering rules would mean that due to a death or a divorce or a change of ownership, that grandfathering would be lost. So this has been a bit of a fear factor for a number of weeks now. And finally, Jim Chalmers came out this week and did the backflip on those, and there's making changes to the legislation so that the tax status of those negatively geared properties will be maintained in both of those circumstances.
Bit of common sense tweaks to the policy there, Lisa?
Well, look, at a time of grief and concern, or I don't know, sometimes divorce is a party and good riddance.
May not be grief, that's right. Good time for a celebration.
Relief and release, but either way, you don't want it impacting as hard on the bottom line. So this is probably a very welcome change. It's always the devil is in the detail of how that relief will be applied, but good to hear. It does weaken the position of the government, though, in terms of their strong tax reform and trying to fix the budget, etc. So it, may help with the election time, but maybe they should have got ahead of that in the first place and come up with that pre-prepared in their budget. Yeah.
But it just shows you when you try and do tax reform, that you try and bundle so much in at once, clearly it's not going to work at the same time. So if they went a few things at a time, might have been a little bit different.
I heard Jim Chalmers, speaking of tweaks this week, talking about the CGT changes and, come 1 July, 27, we're going to lose the 50% going forward and all that sort of stuff. And then the question has been asked, how on earth are we going to go and value all these things come 30 June, 1 July next year? And we know, with our share portfolios and like that, it'll be pretty straightforward because it's, daily priced and the rest of it. And no one really had an answer. So the government put out a memo, to their credit, 100-page memo about there's a 9-step process of how you could potentially value the properties. And everyone just went, you're kidding, aren't you? We're going to have to use like real valuers to go and do this. But I don't know what the numbers are, but there's like millions of investment properties out there. There are certainly not millions of valuers out there. So good luck getting your property valued next year and working out the process. So I look forward to people that will be arguing that they're, obviously the higher the price on 30 June next year, the better from a CGT point of view. So there could be some interesting discussions about the methodology used, and they better get on their bikes and start telling us how we're going to be doing that, because before you know it, we'll actually be at that point where we need the valuations.
Correct. It'll be a good time to be a valuer.
I think it could be happy days. Yeah, they said this for valuers. That's exactly right.
Future-proof job, I keep getting asked, with AI stealing all the jobs. What's a future-proof job? That might be one of them.
It could be the bots valuing our investment properties. I don't know. What else has been going on, Lisa? What else have you picked up this week?
Well, the most amusing thing I feel was, the news out of SpaceX and, the metaphor really of one of its bits of space junk accelerating at, over 8,000 kilometers an hour into the moon, and gravity basically having slowly pulled it into that disastrous end for that piece of space junk, and a bit similar in terms of, the share price since listing. Initial excitement, but then as reality has come to pass, returning to Earth. And this week, the new body announced its first sort of public statements about, revenues were up, great, but it still hit a loss yet again as an entity because of largely a lot of its AI capex spending, and announcing something like $15 billion worth of spending. So kind of doesn't matter how much money their Starlink business, which is really the profitable end of things, brings in, they're still going to be overspending into that sector. And obviously the market hasn't responded that well. Some of the competitors, not so much in the robotics, but in that sort of AI spend, we saw Amazon with its cloud computing and AI spend went up quite substantially. Microsoft went up this week. But SpaceX was certainly brought back to Earth by that gravity.
Yeah, I think the numbers I saw was $18 billion spend by SpaceX, and they raised $86 billion in the float. So that money can be burnt through very quickly. But like you said, some of the beneficiaries of this were NVIDIA. So SpaceX says we're going to exclusively buy all of our chips from NVIDIA, and NVIDIA said I think their share price was up like 4%, and SpaceX was up 14%. So a lot going on in that space, literally.
But certainly in terms of valuations and price to earnings ratios, it certainly seems atmospheric numbers still at the moment. And I did see a very funny quote during the week, that we're not really looking at price to earnings anymore. We're looking at price to imagination sort of numbers with some of these companies.
But if you believers out there, you're still a chance, yeah.
Yeah.
If you wanted to raise billions of dollars, I think the president of FIFA was trying to do the same thing. Maybe he's going to space. I'm not too sure, but he basically tried to shell off the company and get 20 billion. I'm not too sure if that was going back into FIFA or back into his pockets, but that could be a play. Maybe he's going to the moon.
I'll tell you what, Pat, that's actually a good one. Imagine, when analysts and fund managers, portfolio managers look at stocks, and they say it's really important that companies have got their ESG under control. And I'll go straight to the G of the ESG and talk about the governance. Can you imagine pulling apart the FIFA scenario and sort of saying, let's just have a look at the governance at what's going on there? I did share a funny meme with the guys earlier this week, and it was the UEFA. So this is basically the European countries that are part of UEFA from a football perspective. All 55 of them immediately went out and said, we will be totally against this. Well, in fact, we'll just boycott the next World Cup if you were to try this stunt to try and sell the World Cup. And someone came out and said, how rubbish are you at your job that you can actually get 55 European countries to agree on anything? Like, that's how badly you're hated in the world. So the president is hanging on for dear life. I don't know how long he can hang in there, to be perfectly honest.
And look, Argentina and England, if they can agree on anything at all, this is the one, right? Out you go, Gianni. Sorry.
Yeah, I think. I don't think there'd be too many people complaining apart from Gianni and Co and his mates from there. Lisa, I saw that there was some proposed job cuts. Was it Qantas? Was it someone else?
Yeah, so two big companies during the week. So the first was Coles, who were announcing entering into an agreement with Accenture to then use their staff, or want of a better term, to handle a lot of what are currently internal actions like HR, etc. Of the Coles group. Well, they're going to make a bunch of people redundant within Coles and instead have Accenture do those through their India call center operations and finance operations. So finance, tech, HR and marketing will be outsourced via Accenture. So that was sort of a pretty big announcement that hit the markets. And meanwhile, Qantas also looking to do similar sort of thing, outsourcing back office functions. So they're talking about 1,000 people from the back office being made redundant and moving those roles to Accenture. So yeah, pretty big movements there. Not the robots taking over, not AI taking over so much as just more old-fashioned outsourcing to other countries.
And all for the good of the customer experience, apparently. Is that the case, guys? That's the argument they're going to put towards that. But that's significant job functions and job cuts on that front, and and perhaps this is a function of what's happening with AI. Perhaps it's a functioning of companies sort of saying, well, if our staff aren't going to be around and the like, then let's go to the cheapest source possible. And if it's Accenture because they can source that, they're going ahead with that. So, really big numbers. When you talk about 1,000 people and being displaced, that's a serious amount of employees on the hook there.
Look, the RBA might be happy because don't they want unemployment to go up before they're willing to cut rates? So thank you, Coles. Thank you, Qantas.
Yeah, Coles, Qantas doing their bit for the RBA, which does meet next week. So the smart money seems to be that they won't do anything with the rates on Tuesday next week. But we'll certainly be able to tell you what's happened from the RBA decision. Actually, another airline, Pat, you and I were talking about this yesterday. I think it was Jetstar came out with the old couple of new charges, mate. What were they banging on about?
Yeah, essentially you got to start paying for carry-on now. So either you can actually go on the plane, you can go to Perth, 4-hour flight, and they're expected just to take a purse or a backpack with minimal in there that you can put under your seat. So you got to start paying for carry-on now. So it's getting to the point where I actually booked flights to Adelaide for next March, and it was actually cheaper to go Qantas than go Jetstar, because once you factored in paying for carry-on or checked-in luggage, it was actually cheaper using Qantas, which I found amazing.
That's incredible. And I did read somewhere that I think it's like 21, 22% of Jetstar's complete revenue comes from baggage fees and from selecting your seat. They charge you a little bit extra so you can pick your seat. I thought about this, and I thought if you were, and they've, this is a bit like the 1,000 job cuts. This is going to be better for the customer experience. These guys came out and said, no, this is because we want flights to be leaving on time and be on schedule and all the rest of it. And there's always delays because of these overhead bags and the like. And I said, well, okay, why don't you reverse that then and let people check in 20 kilos and not charge them, and then sort of go, if you want to carry them on the flight, we'll charge you for that. Don't think anyone came out with that because that's not that profitable, eh?
I must say, the seat selection and paying for that, I feel like I've never paid for it unless it's been an international Jetstar flight. I sort of figure we'll just see if they split myself up from my husband and give me a bit of a break from his constant, where's the food in the bottom of my bag? And, where are my headphones? I think I've forgotten them. Can I share yours? And
I reckon my wife would pay extra to ensure that I wasn't sitting there and annoying her for a couple of hours. All good, all good. Well, look, that's a bit of a snapshot of all the news around the world, the markets, and there's certainly plenty going on. Anything exciting planned on the weekend, guys? What's happening? Anyone doing anything nice?
Just a young boy Lockie. He's in a prelim this weekend to make to the grand final.
Oh wow!
So yeah, so I'm pretty sure he should make that. They've beaten the team twice, and then Lily's actually got a week off. She's already made the grand final for next week. So how we go.
That's what you get for finishing top spot.
Exactly.
Like it. What about you, Lisa?
Well, tomorrow morning I'm meant to be meeting a friend at the Wallen Farmers Market, and because we did see the weather's meant to be dry at least, if not beautiful and sunny, but that's the start of it. And then watching the hubby in a gig tomorrow night, but he's been a last minute session filler. So as of this morning, he didn't know the set list yet, but I'm hoping he's practicing hard at the minute, having received that. So
sure he has, and if he doesn't perform, I'm sure he's going to hear about it from you. He'll be in his ear. Too good. Well, thank you everyone for joining us today and joining the weekly wrap. Always a pleasure to have you guys with us. Thanks for all your support, and thank you to the team that continues to power away and do a whole lot of great work for all of our clients. So have a great weekend, and we'll hopefully see you all next week. See you guys.
Thanks.